We are back ahead of a huge CPI print tomorrow morning. We're going to be discussing that, the latest happening in the markets with DraftKings, WeWork. Hey, look, natural gas having a nice little day. All of that and more, including some market psychology. Very excited for that today on Money Never Sleeps. I'm telling you, man, that gets me fired up every time. I want to make that my my cell phone ringer now. Like every time I get a text, hit that little one. Gotta get me pumped. Anyway, welcome to Money Never Sleeps. Appreciate everybody for being here. As we get going today, hit some buttons down below. Like, subscribe, drop a comment. Chris, good to see you. Randy, as always, good to see you as well. Nothing that Kevin or I say on this show is financial advice. We're not financial advisors. We love following the markets, playing this fun ass game. Best game in the world. But please do your own research before making any buys or sells. Kev, we got a big CPI print tomorrow. Expectations coming into it for the CPI core number, they're looking at 4.7% year over year expectation. That's not great in my opinion. 4.8% previously. For the headline number, they're looking at 3.3% year over year, slightly up from last month's number. We've covered why that is the case, but if that thing comes in hot tomorrow, Mr. House, welcome as always. If that number comes in hot tomorrow, it is not going to be good. We are going to nuke. We are seeing the markets having another rough day in TradFi. Crypto, we're kind of flat. We're back into this range. The NASDAQ was down even worse earlier. We're seeing tech get beat up pretty good today. What are you focusing on as we move into the last closing day in TradFi? And I mean, we know that the crypto market is never done. So what is your attention on right now?
Yeah, absolutely. I think I've been keeping an eye on natural gas today, LNG, absolutely wild numbers out of Europe. And, we're expecting that the price can continue to go up. I believe it was like 20% today. In the past 2 days, since I bought just, some shares of UNG, I've made like 10%. So I'm not complaining about that. It's not bad. But yeah, it's been pretty interesting on the energy front. I think that we're also seeing a lot of, demand for oil in, the Brent. So very interesting on that. I'm also taking a look at some of the data that came out of China. Very wild data. We can get into it in a minute, but it's definitely going to play a huge impact, in my opinion, going into the next few months. And it's definitely going to impact the U.S., whether they like it or not.
Yeah, Brent is on a nice run right now, up over 84 a barrel. Pretty
Amazing.
big comeback it has made there. I think the energy trade still has plenty of legs to it. We have some interesting things going on. Disney is going to be doing earnings after hours. They reached an agreement with Penn Entertainment to be the official, sports book of ESPN. It's going to be called ESPN Bets, a 10-year, $1.5 billion deal for Penn to use ESPN's name and branding. That is pretty crazy. I've been looking at DraftKings as kind of a counter trade to that. We're seeing a huge bump up, 11, 12% gain in Penn. DraftKings, on the other hand, down almost 10% on the day. To me, that is a buy the fear kind of opportunity. I do think, I use DraftKings. I like DraftKings. Like it's a quality interface. They have good promotions. They do a good job of attracting new customers. And with football season getting ready to start, I think they're going to have some good results. They just I think had their first profitable quarter. It's been a long time coming, but they've made progress. And to me, this is one of those opportunities, especially when we talk about market psychology. If everyone is shifting in one direction, it's a great idea for Penn and ESPN, but they still have to execute on it. Whereas DraftKings and Penn could not execute with Barstool Sportsbook. So to me, there's obviously ESPN is a much bigger brand than Barstool. Okay, let's not get it twisted. But at the same time, they still have to execute. And DraftKings is still ahead of them. And to me, if we see a move down like that in a day, a 10% move to the downside, that is a buy the fear kind of a situation. So look, that is the one play I'm looking at in addition to continuing to keep my eye on UNG. It's going on a nice little run right now. Good call there, Kev.
So not like was gonna say, is this not like Threads versus Twitter? Everyone's getting excited about the new, brand new shiny toy, and then next thing you know, it's like, oh no, we're just gonna go back to what we like. You know what I mean? Again, people once they get used to something, it's very hard to get them off the platform that they're using. So I think that's not a bad call at all. I didn't even know DraftKings was down that much today, but that might be a
Mhm.
little nice little swing there. Who knows?
Yeah, and the biggest thing with these sports books, and we've seen a lot of them either get acquired or just shut down completely, it's new customer acquisition costs. And DraftKings has put in a lot of legwork acquiring customers. It's not easy to get people, people are creatures of habit, right? It's not easy to get them
Exactly.
to switch something if they are used to doing it. The ESPN, I mean, granted, they have a huge opportunity. They got Monday Night Football right there. They're going to be able to blast that, the ESPN Bets app and logo all over it. They have a sports betting show on ESPN2 where they're going to be able to blast the logo all over there. That's going to be like the official lines, and all that stuff. So there's a huge opportunity for Penn from that standpoint. But once again, DraftKings, if they have a superior product and they can still do a good job of these promotions and these different kinds of bets and bring people in, they're going to do well too. Sports betting is continuing to grow as it has been, legalized federally, and now more states are beginning to get on board, seeing how much money they can bring in tax revenue, which still blows my mind that like every state just doesn't have legal sports betting and online poker and marijuana. Like how much tax revenue are these states missing out on by still living in the 1950s? Like, what the fuck? Anyway, that's neither here nor there. Let's get on to a different subject. We're going to talk a little bit of psychology in a bit. But before we do, I know you wanted to discuss crypto, some of the open interest. We saw a huge pump up yesterday. I mean, huge is a relative term. We saw a little pump yesterday, and now it's come right back into that same trading range. What has gotten your eye with crypto? There's all sorts of rumors around the Bitcoin ETF, everything happening with BlackRock. Are they trying to dump on us? I don't know. What are your thoughts there, Kev?
Yeah, I'm sure if BlackRock is going to dump on us, they're also going to wipe with us too. It just seems the way that this market has been going, right? Just fuck retail in every way possible, and remember who did it to you, so you can buy from them later. But yeah, this is the Bitcoin chart. I want to pull this up first. So I'm going to clear off a lot of this because we've seen this shit for the longest. I'm gonna get rid of this. Let's get rid of this too, and let's just look at this simply. All right, we're in the supply zone, right? We shot back up back here, and the thing is that we've kind of broke this trend to the downside, right? But like this is the trend that we're looking at, and we see that we came right through on this is the 4 hour. Let's look at the daily. We can see on the daily that we broke above it, right? But the question is, all right, so we shot up above it, and we're currently trading above it. Look at this daily stochastic RSI. This has moved pretty significantly. Let me pull it up a little bit higher here. This has moved significantly over the past few days. So from Monday, where it was trading, it was at 1.44 and 292. It shot up to the next day at 34 and 1275 to where it closed last night at 66 and 34 points. So it's moving very rapidly, and the price really hasn't moved up that much in the grand scheme of things, which tells me that this move to the upside seems for the time being to be a very limited move. And I think this is a bit of a fake out. Again, we saw a lot of people get really excited when it pushed up here. And I think a lot of people got excited because there was a lot of open interest. It was on one day, it was the most open interest that we saw on an exchange, and it was Binance itself, where we haven't seen this amount of open interest since the FTX collapse. And a lot of people are really excited about that, thinking that, okay, maybe the BlackRock ETF, some of these ETFs are whatever, whoever is going to get first, I don't really care. Kathy Wood's full of shit as far as I'm concerned. But, we're all excited about, this ETF. And I got a little scared because at the same time, when people see something, and they instantly FOMO right into it, right? We saw this with XRP. Oh, it's not a security, shot straight up. ETF comes out. Is it going to shoot straight up? Is Bitcoin going to shoot up? Yeah, people are probably going to buy Bitcoin, right? But here's the thing. I don't think that everyone that's getting excited about it is putting the time horizon in perspective. They said 4 to 6 months they should have one, right? Which would put us somewhere around, I don't know, February, right? Maybe close to March. It's going to take some time. But I think that what we're seeing right now is a lot of people buying into hoping that someone knows something. We saw that open interest. I honestly don't believe that everyone is going long here. isn't going to get stopped out by some massive short, right? Maybe there's a lot of open interest, but a lot of that could be shorts. I'm looking at the charts and it's been fluctuating a lot since I was tweeting about it last night. So I don't necessarily believe that we are going to be shooting up instantly. And I think maybe even someone is getting ahead of some of the CPI data that's coming out. Maybe people are afraid. And I do think that tomorrow's going to be a pretty volatile day for the market, probably one of the more volatile trading days. But if I look at this here, there's two things we need to keep an eye on. And let's see, this is, I'm thinking that we're putting in lower lows and lower highs. These tend to break to the upside, right? But the question is, did that already pass? And are we in this disjoint channel where, let me see if I can create this properly, where we're doing something like this, where we're just kind of in this megaphone pattern. And this tends to be a continuation pattern. We're looking at the same thing happening on what do you call it, UNG, where it's kind of just trading. That's why I think there is going to be a bit of a pullback in UNG before we shoot up a little bit more. We did shoot up pretty well today, but when I look at this at Bitcoin, we're just kind of hitting our head ass. And I think that with the daily stochastic RSI climbing up so fast, I think this is going to be a continuation of the trend, which already has been to the downside. And I think there's a good chance that we could fill this gap here down at like, maybe go to like 27, 26.8 around that range. And that could, wipe out a lot of liquidations. And in that doing so, I think a lot of Bitcoin dominance would go over to Tether dominance just because people are afraid they get liquidated. They're going to try and get out of their positions, close them. So that's what I'm seeing with Bitcoin. I don't necessarily buy a lot of what's going on here. I think a lot of people are just almost FOMOing in. I think the exchanges themselves are still seeing extremely low volume. And we can get into a lot of some of that in another episode, but I think that for what we're seeing right now, the fact that we got rejected really fast at 30,200 and we're currently at 29.5 to the penny actually right now tells me that, okay, that was a bit of a squeeze there, liquidate. And now I think we have to just wait until this data comes out before we start to see a real true move to the upside or to the downside. Can go either way, honestly, but I'm looking at the funding rates. They're positive to neutral. That doesn't give me, hope that people are going to be, looking for a short squeeze. The only thing I can find that's negative funding right now is Bitcoin Cash. That means nothing to us, right? Yeah, so that's what I'm seeing there.
Who even uses Bitcoin Cash anymore? Is that even why is that still a thing?
I don't know. Some asshole probably use it. They're probably yeah. But I wanted to pull this up because our boy Mr. House came out and dropped this in the group chat today, and I was looking at this and I had no idea that Microsoft and Aptos was a thing when I woke up this morning. And then I look at the chart. I'm like, what fucking stupidity are we doing in this world? This is absolutely insane. This shot up all the way to $7.98, and it opened up today at $6.72. It shot up like 16-17%. Absolutely insane. I mean, if we look at this on the minute chart, let's go to the 5 minute. Look at that. What the fuck? What the fuck are we doing in this market? This is 100% just absolute. Let's liquidate everyone that was shorting this. Shot the price up. People are getting excited. They're buying the top, and then we liquidate everyone on the way down. I mean, it's dropped 6% relative to where it was all the way at the top. This is absolutely insane. We're still in liquidation season. That's why I really think that we need to just get out of August to the point where we start seeing a lot more of the macro take control. Because right now, this is what we're probably going to be seeing for a lot of these coins. We're buying the fuck out of news, rumors, and then we're probably going to sell the news. Mr. House, you also made a really great point that a lot of it's going to be unlocked in the next few days. So maybe this is, an opportunity for a lot of people just to get the price up and then sell and get out of there and take a little bit of profit. So very interesting stuff we're seeing there. But yeah, I honestly, not too much other than that in crypto. We're going to have to wait and see how the CPI data comes out. And that's pretty much it. Just follow us on Twitter if we have any updates. But Bitcoin's pretty much the main thing to be keeping an eye on right now.
I hope we have some fun tomorrow. It's just been so boring, man. This market has
let's send it down.
It's been so boring. Let's get something tomorrow. I just don't come in right at expectations. I feel like for a while now, it's been a while since there was really some fun volatile days with this inflation data. But for a while, it's just been even keel. The markets don't really react. We need something crazy. We need some fun. We need a little bit of excitement. I'm tired of trading in the same godforsaken range forever. We're going to be here for another, 12 to 18 months. It's absolutely terrible. I have no faith in the markets at the current time. I was telling you before the show, I have my long-term positions that are just locked in. I don't really feel the need to touch. But other than that, I'm just kind of sitting here in my hands. And that kind of transitions into what I want to talk today about, psychology. because to me, the reason I love this so much is investing, the markets, whether it's stocks, crypto, it's the best game in the world. And I love games. It is the best game in the world. It combines all of the things I love. It involves a little bit of gambling, taking some risks. It involves, having to like think rationally and deeply on a lot of different topics. It involves, statistical analysis, which I'm a big nerd about. And it involves psychology, something that I'm also a big nerd when it comes to. So to me, investing is the best game in the world, just period. It's so much fun. The stakes can be really high. It's crazy. We don't talk enough about the psychological side of things. We focus on the macro, we look at the technicals, but the ability to kind of change the way that you view things and eliminate a lot of the cognitive biases that slow people down is a huge part of this. Something that I learned, started looking at a long time ago, whether it was in poker or sports betting or the stock market. Like you have to find a way to remove your biases. And the first way to do that is to be aware of them. So I kind of want to discuss that today. It's a slow news day otherwise, so this kind of lined up perfectly. So when it comes to these, there are different types of cognitive biases that are really at play when it comes to investing, Kev. The first one, and I think the biggest one for a lot of people, is going to be an anchoring bias. I take it you know what that is.
Oh, yeah, I remember from the good old days of the old Folio show. Why don't you explain it? Because you probably do a way better job than I could.
So basically, anchoring bias is relying too heavily on one piece of information, and it's usually the first piece of information that you get on something when it comes to making decisions. So let's say, anchoring yourself to a certain price point, right? Like people get anchored to, when I first saw Bitcoin, it was $10,000 and now it's $29,000. So I can't buy it now because I didn't buy it at 10,000, right? Like you get anchored to these price points. You get anchored to your first exposure piece of information, and that all of a sudden hinders your ability to act now. It's like, yeah, maybe Bitcoin goes back to $10,000, Kev, but that's the reason that you think it's that, and the reason that you don't buy Bitcoin now shouldn't be the fact that you first saw it when it was $10,000, right?
Yeah.
So that is where I think that is one area that people get really messed up with, is they look at the, price of an asset was X when I first saw it. It's Y now. So I can't go back and get in until it's at X, which is going to cost you so much money. It's like, you're never going to get the perfect timing on something, but it's more important to see, okay, where do I think it's going to go in the future versus how much lower do I think it's going to go now?
Absolutely. I think a good example of that's a few days ago when I was looking at UNG. It was $6.66, right? So I bought in when it was shot up a little bit, under $7, and I sold maybe like a day and a half ago. But then I saw that the price was still going up. I said, screw it, let me just get in for a little bit of a trade. I didn't care what the price was. I knew that long term it was going to be going up, and look what happened today. Shot up pretty good amount. So yeah, I mean, getting stuck on a price absolutely will hurt you. I've definitely got stuck on prices before trying to get in. Sometimes you just got to bite the bullet if you think that the risk versus reward is greater, if the reward is greater than the risk, I should say, because you can miss out on some great gains. You could also miss out on opportunities to short things too, right? It's like, oh no, I think it's going to keep going up. Let me short from a higher level. But sometimes things just move and you have to take action. So, getting caught on one idea too much, or even a piece of information and believing that and taking that as 100%, like, this is fact because I saw this and this is what I believe in. Got to back that up with either action, or you got to back it up with more evidence to make a more informed decision.
For sure. Two parts of anchoring bias I want to talk about before we move on, and this can help people with overcoming it. Number one, there's another term, conservatism bias. So this is essentially not being willing to change your beliefs when new evidence is presented. I think that is a really, really important one. People want to stick to their original beliefs. And we'll talk about the ego here in a little bit, because your ego is your worst enemy when it comes to any sort of market participation, right? Like, you have to strip your ego out of it. But being willing to change your priors is super important. Like, it just is. You have to be willing to admit when you were wrong about something and adjust and change. And that's why on this show, you and I are constantly going back and forth, and we're trying, even though we may be bearish, we're trying to pick apart and like see where we could be wrong and find some of the bull cases for these things. So that's one of them. Number two goes hand in hand with that. It's called law of the instrument. Big, highfalutin sounding name, but essentially relying on familiar tools or methods while undervaluing alternatives too much. Okay, so not being able to, it's like someone who only does technical analysis, but never incorporates, and just laughs at macroeconomics, or vice versa. Someone who is a macro maximalist and just laughs at the idea of TA, right? Yeah. So those two things right there, you have to be you have to understand to, admit when you're wrong about something, and I think in this day and age, that might be the hardest one because it's all over social media. Everyone thinks they're a fucking expert in everything. Oh, yeah. And knowing what lane to be in and when to change lanes and when to pivot your thought process is just so critical. And most people are just unwilling to do that. And if you want to win in this game that we're playing, you have to be willing to change that.
100%. And again, I think that's why you and I do fairly well. It's because we do have the technical analysis and we also think macro about a lot of things too. I know a lot of people on Twitter who are just TA guys, right? I think they're some of the best TA guys in the world, but they're also expecting a bull run, not anticipating all the bad shit that's going on in the world right now that could absolutely hinder price. And that comes into psychology too, right? You have to, kind of anticipate what someone else is thinking. If they're put in a situation, are they going to be buying or are they going to be selling regardless of whatever the price in the charts is telling you, right? So yeah, you need to be open to other ways of coming to your conclusions. And I think that if you get stuck on just one, that's probably going to be just you shooting yourself in the foot.
For sure. Let's move on past anchoring. Let's go to confirmation bias. Essentially, focusing on information that confirms your beliefs. This one, people just want to believe that they're right, man. Like, yeah. People would rather believe that they're right than actually get something right. And, they'll always attribute, if they get it wrong, it wasn't because their thought process was wrong. It was because some outside source caused it to be that way. So trying to find conflicting information and searching that out is so important. There are a few things in this one as well. One of them is called the backfire effect. That's going to be reacting to, alternative information by actually strengthening your previous beliefs. That's one that a lot of people do. It doesn't really make sense to me. Like getting so, and I see it a lot with like sports fans as well. Like they have their team, they have their rooting interest, and they just get so attached to it. And any other like alternative information or data points that say that they were wrong, nope, they'll go even harder for their team or for their players. So that is one that has never made much sense to me, but I've seen it play out in real time. And then you also have this idea of selective perception, and that is going to be when expectations affect your perception of an outcome. So once again, two areas in this biasy that need to be flushed out if you want to get better at investing.
Absolutely, completely agree. It's you just can't, what do you call it? If you want to be right all the time, you're bound to be wrong. I'm sorry. Just if you're wrong, who cares? Especially in this game, if you're wrong, at least and you save yourself a good amount of money. And if you're right, awesome. But you got to know when you're right and you got to know when you're wrong, and that's going to help you get in and out of positions so much better, and it's going to save your ass in the long run.
Yeah, you and I are here to make money. We're not financial advisors once again, but we're here to try to help the people who watch this show do better if we can. I don't give a flying fuck if my initial interpretation of something was wrong. As long as I can pivot that and use it to make some money, make better decisions, that's fine with me. That's all that really matters. Let's talk normalcy bias for a second. And this one was funny because I read the description. I was doing research for it, and it immediately, I hadn't really heard of this one before, but it was straight out of The Big Short. And this is the inability to plan for or react to a disaster that has never happened before, right? Like this is exactly what we saw in The Big Short. I feel like you and I are the two guys like working out of the garage in The Big Short, trying to find opportunities where people, how they say that people don't want to think about bad things happening.
Exactly.
I feel like this is that bias to a T. This is what we're trying to do here. So just an interesting one, right? Like people only want to, if people want to expect good things to happen. I'm all for being optimistic and being positive, but you gotta be realistic too. Yep. And shit goes sideways sometimes, people. It just does. I know the people who are watching this show totally get it because we've been beating this drum for quite a while. But that was one I wanted to just quickly bring up because I found it to be very funny. And then there's a whole bunch of parts to the ego. And so we're going to talk about egocentric bias for a second. And this is simply put, relying too heavily on your own perspective. That to me, the ego is going to slow so many people down. Mr. House right here, great call on normalcy bias. You're just using cybersecurity and the reason why companies don't acknowledge it. Yup, completely agree. Let's talk about the ego though, because that may be your biggest enemy right there.
Me personally?
No, all of us.
I know. I'm just
yes,
kidding.
you personally, Kevin.
Oh,
you and your charts and all your lines.
Going after CZ all these years, that's gonna get you killed. Yeah. No, yeah, let's talk about it. I mean, obviously the ego is pretty I don't know what it is, man. People just for some reason can't get past it sometimes. And that's one of the most dangerous things in the world. Again, it goes back to people wanting to be right. And it's like I can't be wrong. There's no way I'm wrong. It's like never doubting in yourself. You're not doubting in yourself per se, but it feels like it. It's more of just like you're doubting in maybe some of the conclusions you came to prior to some of the new information that's came. If you want to expand into that way more, you're probably more able to.
Yeah, so there's one part of this called the bias blind spot, and it's essentially the tendency to see yourself as less biased than others, and for others to have be more biased. So it's like you just have this constant view of yourself. I think people put themselves on a pedestal to some extent. Also, another one, the illusion of control. The ability that people have to overstate like how much control they have over external forces. Like we can want all of these things to happen. We can want prices to go down. We can want to see the market correct, but it doesn't matter until it's time for that to happen. So those are just a few on the ego standpoint. There's a ton, like this is a really interesting to me part of psychology and part of market participation is the psychological side. It's not something that we can cover completely in one show, but just a few things I wanted to bring up to give us a different way of viewing the markets right now. Because like we said, you can have the best TA in the world. You can have the best macro outlook in the world. But if you're not constantly refining that through these different psychological, and these cognitive biases, and you're not able to make the decision and make the action based off of what you're seeing because you're blinded by some of these, then what the hell was the point?
Absolutely. And I think I do want to add this too when it comes to, because I think we are pretty contrarian to what a lot of, mainstream media is putting out there in terms of the market and stuff like that. You kind of have to know what other people are thinking as well, right? If people are believing in a certain aspect, usually the market doesn't go in that way. So this game is fun because you also have to, anticipate what the other person on the other side of the computer, the other side of the terminal is, willing to do next. And the question is, you have to also account for, what's your solvency rate, right? When you're, whatever your risk management is when you're going into a trade, you kind of have to understand how long am I willing to mentally be able to sustain pain if this goes south, but at the same time, what is my intended goal? Because if I am right, am I going to sit in there too long because I think that nothing bad could ever happen? And that goes back to the normalcy bias too, right? It's like you get comfortable in a position, you get complacent, then necessarily that might, be the demise of yourself, even if you are right. So it's really about, understanding that these markets shift. What's the end goal? And again, how are you going to play your cards knowing that someone else is going to try and outthink exactly what you're doing as well? So that's part of the fun in this entire game. That's why I love it, but it's also dangerous as fuck because we got money on the line, right? But so it's absolutely just, I think that's my favorite part of trading itself, is just trying to think what other people are doing or see numbers and shit like that. And it's just like, okay, now that I know that there's money moving in this sector, what could that possibly mean? And putting together this narrative that, okay, this is based on this evidence, I believe, and I stand with this because this seems the most reasonable and also the most likely for, based off of also TA. So not using just one thing for me to make a reasonable assumption that the market is going to move in this direction. And if I'm wrong, I'm willing to say I'm wrong at said level so that I can get out of it and then readjust, reassess.
Yeah, I think in this current market, to me, anchoring bias is maybe the most important one to focus on because our expectations we're going to get, right now, preservation of capital is everything.
Oh, yeah.
And if let's say you bought Bitcoin at 40K and you see it at 29 right now, and you're like, no, I bought it at 40. I can't sell it here. I saw it at almost 70. It's going to go back up there soon. I can't sell it, blah, blah, blah. If you get anchored to some of these prices that you're not willing to preserve that capital and like protect yourself, that is another huge problem. And it goes along with the normalcy one as well, right? It's like, oh, it's already come down this much. There's no way it's going to nuke to, like when you say that you think Bitcoin's going to 12K or 10K, it's like, no, no, no. That would be too bad. Nothing could happen that would cause that. I think that's an area where being able to overcome these is just fucking huge.
Speaking of things that could never happen because we're in a bull market, I would like to talk a little bit about China, if that's okay.
Let's do it. I think that was a perfect way to wrap up the psychological part of the show. Appreciate everyone who stuck through that and enjoyed it and hope you got something out of it. But let's wrap up today's show talking about China and what's going on over there.
Definitely. Guys, we know we've been talking about Asia. We've been saying that, pretty much the only place in the world that's not being hit with a recession or, any other aspect of inflation rising has been the U.S. And I don't know if that's true or if it's just a narrative that we're telling ourselves because we are in a pretty vital election year coming up. And I think it's the latter. That's the reason why we're just not being truthful. But I just want to show this. This is China reports double-digit plunge in July exports and imports, missing expectations. Now this is from Monday. We got some more data last night, but the data that I want to show here is that. Let's see right here. A Reuters poll predicted that 12.5% decline in exports in July from a year ago in US dollar terms, right? But it ended up being that we fell 14.5% in July in terms of exports for China. And in terms of imports, it dropped 12.4%. That's absolutely wild, right? And then you and I were talking about this before the show that the youth unemployment rate in China has been increasing to an insane amount. It's double digits, right? It's that's means pretty much young individuals to like medium, I don't know, like probably into the 30s are unemployed. There's just no jobs or there's no work that they're actually, taking part in. But I also want to share this, which is from, I'm going to use Zero Hedge because they have the best layout, simple, straight up facts on Twitter. This is what I was looking at last night. China CPI came in negative 0.3%. Expected was negative 0.4, right? And we can see that the PPI is negative 4.4%. Expected negative 4.0. What does that say? That's deflationary, which is not good either. There's inflation, disinflation, and deflation, and obviously there's stagnation, stagflation, shrinkflation. There's all these types. Yeah, there's tons of these things. But if we look at this right here, China CPI being in the negative, that means that the economy is slowing down, right? That's something you should be concerned about because we're also seeing in Japan, their problem is inflation is increasing, right? They haven't raised rates yet, but you can see that they've already made 2 unscheduled announcements to start buying treasury bonds in Japan. We're talking about that yen carry trade, how people were borrowing in the yen because the rates are so low and they're putting into the U.S. markets because the rates are yielding a higher margin, greater yield. But this is the thing that we need to keep an eye on because if inflation continues to rise, we're also seeing oil beginning to rise in Europe and natural gas is starting to rise, and we're seeing China's economy slowing down, and we're seeing Japan, pretty much in a place where they're probably going to have to start raising rates, and we have China that's absolutely having a shrinking economy. These countries are going to start needing cash in some way. These are the 2 top countries that have the most U.S. debt, by the way, as well. So I wouldn't be surprised if we start seeing a sell-off in treasuries coming fairly soon from either of these countries. And, I wouldn't be surprised if that comes end of August, maybe September, October. It just seems like a lot of things happening. We anticipate the markets to move in September, October. And this data that came out last night, I didn't understand how to read it at first. I had to look at it a little bit further, and I started reading up on a lot of the imports and exports. This is not good in any way. And then again, that with the unemployment rate going up just tells me that China's economy is shrinking. Japan's is on the verge of going up, and I think that we are on the verge of seeing a CPI spike. This is why I think that this is really important going into tomorrow. How will we spin this if this data comes out that we came in a little bit hotter? I don't know. In some way, I think the markets will react kind of violently, but then maybe we push up a little bit from here. Again, maybe this is normalcy bias. No, we can't be in a terrible place, because the economy's going up and the market's going up. So we're doing great, right?
Bidenomics, baby.
We're looking at, I think it was like 6%. The gallon of gas has gone up since July to where we are currently. We're also looking at oil absolutely increasing. Liquid natural gas has been increasing. We saw that it was 4.6% for groceries. We saw that, meat and, chicken, poultry, pork, all that stuff we talked about, prices are going up. We also see that we hit $1 trillion in credit card debt. We're also starting to see that we have student loan debt coming up. This is the part where the TA, you kind of have to throw it out the fucking window. I'm sorry. But this is why we have to have both TA, macro, and then also be intelligent enough to construct a narrative based off all this information that we're getting that makes sense. And, even if you poke holes in it, nothing's going to come pouring out, right? It's not full of shit. This is a pretty airtight, scenario that we're building this narrative. I think that we are going to see escalation. We are seeing energy already pick up going into the winter months. I do think that we are starting to see that, I forget what commodity it was. Oh, it was rice. Rice is, they're expecting a low supply of rice. So it's going to cause higher demand. So a lot of things that are adding up right here, and we're getting to a boiling point. It just seems that it's all coming up. We're coming into these vital months in the stock market. Rates are extremely high. CPI might come in a little bit hotter based on whatever the oil, price was for July. I don't know how much that's going to make an impact. If we're just going to, subtract oil like we usually do, if we're going to make fake numbers. Core is going to be the most important thing, I think. But yeah, this is definitely something that's telling me that we're not just seeing a collapse that's going to happen on the US scale. We're talking about a global absolute meltdown, the big come down. I genuinely think the reason it's called the big come down is because if you're a Nine Inch Nails fan, that song's about coming down from drugs. And I think that we're on this euphoria from 2010 all the way to 2023. Now it's time for the big come down, and we're all going to just be humbled. And that's all I got to say. That's the way I wanted to end this show. And yeah, just be careful. But really important news. Don't just listen to what everyone in the US is telling you.
In the words of the great Samuel L. Jackson, hold on to your butts. That's going to do it for today's show. We'll be back tomorrow, same time, same place, CPI print. Expected some volatility in the markets. We'll look at Disney earnings, how those pan out here when they drop in about 45 minutes. Thank you, everybody, for watching. We appreciate it. Chris, Randy, Mr. House. I'm sure
Thanks,
Ace
guys.
will hopefully watch back later at some point. All of our regulars, we appreciate you guys. Payne, Bundy, V Squared, all of you guys, thank you so much. Hit the buttons down below if you have not yet. A like, a comment, sharing us out, subscribing to our channel. All of those things mean a ton. Have an awesome day, everybody. We will see you tomorrow.
Take care, everyone.